Good morning, everyone. Good morning. Hope you guys are doing well. Today is Tuesday, July the 28th. Overall markets yesterday ended up rejecting off our previous day highs. We opened up above our previous day highs on the SPY. The Qs rejected right off the bat. The semiconductors, the SMH was a lot weaker. This one, of course, pushed towards the downside. Ended up having a pretty strong candle close towards the lows. This one, as you can see, is underneath our previous day lows. Qs, similar thing, underneath our last week's range. The SPY is pushing towards the downside. We're actually bouncing right off the bottom of the range. So as you can see here, the overall semiconductors and the tech are leading the markets lower. And then of course the SPY is right at a key technical level. So coming into market open, yesterday was the only day we didn't have any red folder news. Today we have a lot of things to kind of talk about with, of course, earnings. Major tech is reporting on Wednesday and Thursday, and then we have a lot of red folder news as well. So that being said, as I mentioned, there's a lot of things to kind of talk about coming to market open before we head on to that. What's up, everyone? Good morning. What's up, B Roots, J10, Kelvin? Good morning, Maria, Cody, Knight, Alejandro. What's up, Lamit, Kevin, Gerald, Andy, Wallace? Good morning, P1. Good morning, Juan, Z Norris, Andrea. Good morning, Julius, Hartik. What's up, Deuce, Bobby, Zena? What's up, Jose, PA? What's up, Duck, Christopher, Ken? Yeah, good morning, everyone. Hope you guys are doing well. Let me pull up the economic calendar and we will get started. So coming into market open here, at least for today, we do have some orange folder news that is going to be at 10 a.m. Eastern Standard Time. We have consumer confidence. Tomorrow is going to be one of the big days with, of course, FOMC. That's going to be at 2 p.m. Eastern Standard Time. And then, of course, at 2:30, we do have the Fed speaking with, of course, the press conference. Thursday, advanced GDP numbers come out right in the morning at 8:30, core PCE price index, along with the unemployment claims. And then on Friday, we have the unemployment cost, and the revised consumer sentiment. So the main thing this week is going to be on Wednesday with the FOMC statement and the press conference. We do have a bunch of earnings as well. At least for today, we have a couple notable ones to keep an eye out for: Bloomberg Energy along with STX. These are a couple ones to keep an eye out for. As for tomorrow, SoFi and of course the big tech reporting. This is going to be software, Microsoft and Meta. You have Hood, and then, of course, you have ARM and Qualcomm. And then, of course, on Thursday, you have Amazon and Apple. So these are the notable earnings coming into this week. We'll keep an eye out on Bloomberg Energy along with STX coming into today. And then we'll keep an eye out on FOMC, of course, tomorrow with Microsoft and Meta reporting after close. That being said, let's hop straight into these charts to show you guys exactly what we're looking for coming into market open. Starting off with, of course, the higher time frames. Let's take a look at this from a daily time frame perspective on the SPY and Qs. We'll mark out the EMAs here, as you can see. So starting off with the SPY, we are right at a key level of support. The SPY, of course, is the one that is a little bit stronger compared to the Qs and the rest of the markets. SPY is only down roughly 3 to 4%, whereas the Qs, as you can see, is now breaking underneath a key level of support. The SMH is coming back down into a key level of support. We broke back underneath that 560 on Friday, and as you can see, we're all the way back down in towards that 540. So for the semiconductors, this one is definitely a lot weaker compared to everything else. As for the SPY, let's take a look at the daily time frame. So as you can see, the daily chart, we're still consolidating in between that 760 along with that 730. We can just mark out the middle of the range. In this case, what we have is our 740. As for yesterday, we ended up gapping up above our previous day highs. We had this kind of daily gap fill here as well. If you go back onto the hourly time frame, we got opened up above our previous day highs. But within the first 30 minutes, or sorry, within the first really 10 to 15 minutes of market open, we end up having a pretty solid rejection. So for the SPY, ended up rejecting off our key technical levels, got back underneath our previous day highs. We mentioned we could see a potential move back down in towards that previous day close. And once we reject it, we end up having a push all the way back down in towards our last week's lows, which is that 736. What are the main levels coming into market open? At least for today, the levels that I have marked out is going to be that previous day lows along with our previous day highs. These are the key technical levels coming into market open here. What I'd like to see now is the reaction that we have off these, off the previous day highs and previous day lows. Other levels that we can have marked out here as well is going to be that 740. So coming to market open for the SPY, what I'm going to keep an eye on is the reaction that we have off our 740 along with our previous day lows. If you want to see some upside, the reclaim back above that 740 is in play for a potential push back up and towards that 744. Another possible scenario is the bounce play here off at 736 for a pushback towards the highs. If we do want to see some downside in the markets, what I'd like to see is a potential pop and fade coming to market open. Pop, we can be looking for a fade back down in towards that previous day lows, or now shorts are of course in play underneath our previous day lows. If we zoom out here on the higher time frames, basically what we have is the break and retest off that 740, which would be just be off a key technical level. You can see multiple touches, and then if it just stays heavy, right, market structure still intact for continuation lower. Or now if we get underneath, as I mentioned, that 736, key level support for continuation towards the downside. For looking at the ES, the key levels that we have marked out coming into today is going to be at 74.80. Other levels that we can have marked out here now is going to be that previous day low. So similar thesis coming to market open. Keep an eye on the potential pop and fade for continuation, are now underneath our previous day lows for a push towards the downside. So let's keep an eye out on this key technical level here on the hourly time frame, and then we also have that previous day lows. Let's go on to the QQQ coming into market open. Let's take a look at this one on the daily time frame. The daily on this one, as you can see, is a little bit weaker. We did break underneath a key technical level support. We have a couple key levels. We marked out this level that was from a couple weeks ago. Other level that we have marked out here as well is that 685. So we ended up breaking underneath 2 weeks ago. You can see came back for the retest, kind of broke above it, but reclaimed back underneath. Ended up breaking down, and as you can see on Friday, candle closed, and then yesterday opened up right at our previous day highs, rejected, and now you can see we're having another weak candle closure. So for the Qs, based off the daily time frame, we're underneath a 9 and 21. We're breaking outside this key level support. We can just mark out this general area, and now you can see for the Qs, yesterday was on Friday was our first sign where we closed underneath. Yesterday, we ended up confirming this move towards the downside, and now you can see we're getting some more weakness here on the higher time frames. If we look at the QQQ moving forward, what are the main levels that we have marked out? Yesterday, we had a couple key levels. Number one, we had our high that we created on Friday, and we also had that 698, the area that we broke down from on the higher time frames. And we ended up rejecting right off the bat. So yesterday, rejection, held underneath that Friday's highs, and we end up having this continuation towards the downside within the first really 15 to 30 minutes of market open. We're already back at our previous day close, and we end up having more continuation underneath. End up having this retest later into the day, and now you can see we're already back at our previous day lows. So for the QQQ coming to market open, what are we going to keep an eye out for? We're going to keep an eye out for this previous day low level. This is our 676. If you want to maintain some downside coming into today, maintain underneath for a push down in towards that pre-market lows and below, which would be that 670. If we can see, if you want to see some upside, the flip back above, potentially we can see a move up in towards that 684. So that's the key levels that I have coming into market open here. We'll keep an eye on that previous day lows. Of course, we are leaning slightly bearish coming to market open just based off the higher time frames, but we could look for either way, right? The gap fill back towards the upside if you can get above our previous day lows. If we stay heavy, then we could be looking for a pre-market lows and a flush coming into market open. If we're taking a look at the key levels coming into market open here on the NQ, what we can have marked out now is going to be that previous day lows. This is going to be our key technical level. If we do want to see some downside underneath that previous day lows hold, continuation towards that pre-market low and below is in play. If we end up reclaiming back above that previous day lows, then we could be looking for the flip for a move back up in towards that previous day close, which is going to be that 28,200. So that's what we have for the NQ. As I mentioned on the higher time frames, we are breaking outside of this range. We're starting to push towards the downside. One of the key levels that I have in a line in the sand moving forward is simply that 688. You can see we end up bouncing here. This was 2 weeks ago. On Friday, you can see we came back down. We end up having a weak candle closure into yesterday. We ended up closing underneath. So for some upside, right, any sort of bounce that we do have, it's just going to be most likely a short-term bounce until we can reclaim back above the 688. That's when I'd be a lot more bullish in the markets for a potential move higher if we can get back above that 688. But with us breaking outside this range now, every single high is being shorted. We're going to be continuing to look for some downside as long as we maintain underneath key technical levels. In this case, 688, of course, on the higher time frames. And now what we're going to mark out is that 684 coming into today. All right, let's take a look at the SMH on the daily chart. As you can see right here, the semiconductors are showing a little bit more weakness. We're underneath this 580 now, breaking underneath, rejecting, and we're pushing back towards the downside. We are coming into this key technical level support, which is this 540. This is what we have marked out on the higher time frame. So you can see we are coming back down into that 540. Now what we like to see on the semiconductors is the reaction off our last week's lows. And this is our key technical level support here as well. So for the semiconductors, as you can see yesterday, we ended up pushing down in towards this 540. A little bit of buyers ended up stepping in, but now as you can see, we are gapping down here in the pre-market, and now we're right at our key level support. At least for today, what we're going to keep an eye on is that previous day lows. If we hold, we can see a flip back up and towards that previous day close if we can get some buyers above that previous day highs. If we want to see continuation lower, we like to see it just kind of maintain weakness right off the bat underneath that previous day lows. If we can do that, we can see some more downside. If we can reclaim back above, then we can see a push back up in towards that previous day close. Based off of the daily time frame here on the SMH, we're a lot weaker on the higher time frames. We've been underneath the 9 and 21. We've been building up lower highs here as well. Once we end up shifting structure, we are coming down into a key technical level support once again. This is the area that we bounced from earlier. So we could see another potential bounce here on the SMH right off this 540 coming into today. So that's what I have on the semis, at least moving forward. As I mentioned, let's just keep an eye out on that previous day lows coming into market open. With that being said, let's go on to the next names that we have, which are the tech names. If you guys do have any charts or any tickers you'd like me to go over here now, you guys can drop them in the chat. If you guys are enjoying this so far, appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. Okay, first things first, let's talk about Tesla here. This one, we ended up having earnings last week. We ended up gapping down, and as you can see, we're having continuation towards the downside for the first 3 days after our initial bearish reaction here on Tesla. Every single day, we're just doing the same thing post earnings. We end up rejecting off key technical levels yesterday, 316 for a push towards the downside, down into that previous day lows. Today, we're going to have the exact same levels marked out. We're just going to mark out this low that we created here from Friday. So now we just like to see the reaction here off that 308, maintain underneath that 308. We can see continuation down in towards our pre-market lows and potentially below, which is our 300 key psych level on the higher time frames. If we end up flipping back above, which is that 308, then we can see a potential move back up and towards our 310, along with our 314 and 315 here on the higher time frames. As for Tesla, we're just going to keep an eye on the same thing as for yesterday, right? Pop and fade is in play underneath that 308 for continuation towards the downside. As for AMD, let's take a look at this one on the higher time frames. We ended up rejecting yesterday. The semis had a pretty big move towards the downside. We end up having a pretty solid day underneath our previous day lows for continuation lower. AMD and NVIDIA, we end up having a pretty big push towards the downside. For AMD, we actually are breaking back underneath this 500. So you can see a little bit more weakness towards the downside. We end up rejecting off the top of the range here as well. Key levels that we have marked out is going to be that 500 key psych. 500 key psych level is key on AMD. This one pretty bearish, big push towards the downside. And now we're big push towards the downside. And now you can see we're gapping down underneath our previous day lows. We're underneath key technical levels here as well. Underneath that 500 for a push down in towards that 560. So for AMD, this one, pretty big move towards the downside once we gave up that 500 key psych level. Now we are back down into a key level support, at least for today. What are we going to have marked out? We're going to have marked out this 480. Next level is towards the downside, all the way down into that 460. So for today, for for AMD, the levels that we're going to have marked out is going to be that previous day lows, 480 pop and fade back down into that 460 here on the higher time frames. Underneath our pre-market lows here as well, we could be looking for continuation towards the downside. The only way you're really interested in longs would be a potential reclaim setup. The reclaim today is going to be a little bit more difficult on most tickers. I'll probably be a little bit more patient on the reclaim back above our previous day low, since the Qs now is the Qs is breaking outside the range. We need to see a strong reclaim on the Qs if we do want to see any sort of bounce here on these semiconductors. Another possible scenario is if it comes back down right off the bat, you could be looking for a potential bounce play off for 460 here on the higher time frames for a move back towards the highs. That would more so be the bounce off this daily level of support, which would be our 460. So potential 460 bounce if it came back down for a move back up and towards that previous day highs. So that's what I have for AMD. As for NVIDIA, what are some of the key levels that we have marked out coming into today? As you can see, we end up rejecting once again off that 212. And we end up breaking underneath our previous day lows, continuation right back towards the downside. So for NVIDIA, the key technical levels that we have coming into market open is our previous day lows. Once we broke underneath that, you can see we had some continuation towards the downside. Now for NVIDIA, we are back at its key level support, which is our 192. So if you go back onto the hourly time frame, the key levels that we have marked out today is going to be that previous day lows. We do have some more room towards the downside. We can mark this out, which is going to be that 196. For today, what we're going to keep an eye on is that 196 potential pop and fade for a push down in towards that pre-market low and below. So keep an eye on that previous day lows along with that previous day close for potential fade towards the downside. If you do want to see any sort of bounce, right, the reclaim back above, as I mentioned, we could see our previous day close 198 and potentially 200. The best bounce play, in my opinion, is going to be off our key level support, which happens to be our 192. So I'd like to see a pop and fade coming to market open on most of these names and then come down into support. And then we could see a little bit of a bounce off our 192 for a pushback towards the upside. So keep an eye on that pop and fade. That's going to be the thesis coming to market open, just based off the SPY and Qs as well for continuation lower. As for Apple, let's take a look at this one. We end up having continuation above our previous day highs. Really the only bullish ticker here in the markets, while the Qs and SPYs dropping. Apple is continuing to push towards the upside. We ended up having a nice retest last week above our previous all-time highs. And now you can see we're above this 335 here as well. Key technical levels that we have marked out is going to be our 335 break, retest, hold for continuation towards the upside. Levels that I have marked out, as you can see, is that 335. We end up breaking above it on Apple. Nice retest earlier into the session, and now you can see later into the day, we end up coming back for a retest once again, and we're back at our previous day highs. Key levels that we have marked out is going to be our 339 coming into market open. That's the key technical levels that we have marked out. Above our 339, we can see a hold for a push towards the upside. That's going to be one of the main scenarios. Another possible scenario is going to be the bounce off our previous day close for a potential pushback towards the upside here as well. So these are the two things that we have for Apple for a potential push towards the upside. This one's very much bullish. You're not really going to be looking for any short positions on this one. As for Google, this one recently had earnings gap down. We are breaking back above our earnings day high. And now we're seeing a little bit of buyer step in. So for Google, the key technical levels that we have marked out is our earnings day high. So this is what we have marked out. It's our 324. You can see touch here, broke above it yesterday. And we end up having a couple reactions off our key level of resistance, now turning into support. Rejections here off that 330, but as you can see, we have an inside bar day. What we like to see now for any sort of upside, previous day highs marked out along with our previous day lows. You like to see a potential flip back towards the upside for continuation. Another possible scenario is going to be the bounce off our 324 for a pushback towards the highs here as well. As for Microsoft, this one is building up higher lows so far on the daily time frame. We do have earnings on Wednesday. So far for Microsoft, building up higher lows, bouncing off a key technical area. If we do want to see upside back above that 400, it's going to be key for any sort of continuation. Right now, just offer key level support. We're above our highs as well. Now we're actually above our previous day highs coming to market open. So for Microsoft, key levels that we have marked out is going to be our 394. Other levels that we could have marked out here as well is our 388 above our previous day highs hold for a potential continuation up and towards our 398 and our 400. So that's what we have on Microsoft. As for Meta, the key technical levels that we have marked out is going to be that 590. This one's a little bit weaker. Of course, we do have earnings as well. Amazon, similar thesis, a little bit of a bounce off our previous day lows. We have earnings later into the week. So both Amazon and Meta, you want to be a little bit more patient on. Nothing really too much to talk about. Gap down plus underneath the EMAs. Meta underneath the EMAs and a gap down. So just want to be more patient on those ones. As for Netflix, this one's showing a little bit of strength after we end up gapping down with earnings. We got back above our 69. That was a key technical level. And I can see we are having some buyers that are stepping in. Other levels that we have marked out as well is going to be our 70.50 for potential continuation. We have a touch here. And now what we like to see is the reaction that we have off our 70.50. Other key technical levels that we have marked out is going to be that 71.50. Potential break above hold for continuation towards the upside is in play for a move higher. So that's what we have for Netflix coming to market open here. And then SpaceX, as you can see, every single pop is being shorted on this ticker. We do have a lockup period coming up as well. So I just expect this one to, of course, just continue lower until then. All right, with that being said, let's head on to a couple other names now as well. We'll head on to some memory names. If you guys do have any charts or any tickers, we're looking good on time so far. Go over some other names for the next 5 to 10 minutes. So if you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch list, that of course is in the description below as well. All right, let's look at a couple tickers here, starting off with MU. We'll go over a couple memory names. I see some in the chat as well. Key levels that we have for MU is just that previous level that we bounced from earlier. What I wanted to see here on MU was a daily inverse head and shoulders. And as you can see, we're not really holding this 900 key psych. We're gapping down here as well. The semis are a lot weaker. No real buyers kind of stepping in off this 900, and we're flipping back underneath. Key technical levels that we have marked out is that 900. Yesterday opened up, immediately kind of sold off, ended up actually using this as a retest back towards the downside. So for the semis, the levels that we have marked out is this 900. We broke underneath it, retested, and now you can see we're actually heading lower and we're gapping down coming to market open. So for MU, if I'm looking at this one on the higher time frames, we're breaking back underneath this 900. Next level all the way back towards the downside is that 800. So we're rejecting off here all the way back down. Next level is 800 on the higher time frames. If you go on the key technical levels that we have marked out, key level 900, as I mentioned, we rejected off that level and now we're continuing lower. Next levels that we have marked out is going to be that previous day lows. And if you go into the higher time frames, the key technical levels that we have marked out as well is our 800. So what we like to see is that previous day low reaction, a potential pop and fade coming to market open for a push towards the downside is in play down into that 820 here on the higher time frames. If we flip back above that previous day lows, we can see this push back up into that previous day close. That's going to be the key levels that we have marked out. SNDK, this one's continuing to drop yesterday. We end up having a pretty solid rejection on this one. Right off that 9 EMA here on the daily, we weren't able to really reclaim back above this 1600. Lower highs are being built, and now you can see we're breaking underneath this key level support, which is our low that we created from a few weeks ago. And then you can see this low back here. And we end up having a pretty strong push towards the downside here on SNDK. This one is showing a lot more weakness now, especially yesterday. Once we got back underneath that 1520, this one ended up having a flip back towards the downside. The key technical levels that we have marked out is basically our 1280. So that's what we have marked out on SNDK. Other levels that we have marked out now is going to be that previous day lows. What we like to see is just the reaction that we have off our previous day lows. If we maintain underneath, then we could just be looking for that previous day low retest for continuation towards the downside. INTC, similar thesis. This one, of course, had earnings a couple of days ago. Now we're just kind of staying heavy, and we end up closing underneath our key technical levels. The daily chart looks fairly weak now on this one. Underneath the EMAs, lower highs are being built as well. Now you can see we're underneath our key psychological level 100. We end up reclaiming back above on Friday. Candle close underneath. Monday closing underneath here as well. Next level is actually all the way down and towards this daily gap. So for INTC, key technical levels is actually all the way back down and towards our 80 key psych. So keep an eye on INTC. Continuation underneath our previous day lows. Levels that we have marked out is just going to be our 8750. You can drag this up. If we do want to see continuation towards the downside coming to market open, hold underneath that previous day lows. Continuation towards the downside here is in play. If we reclaim back above, then we can see a potential flip back up into that previous day close. That is a little bit further away, but previous day lows is going to be key coming into market open here. WDC, this one showing a little bit more weakness. All the memory names are looking fairly similar here. If we take a look at DRAM, this one is showing a little bit more weakness. We weren't able to hold back above our 56, and now you can see we're already back down into key level support. So for DRAM, this one's showing a little bit more weakness underneath key technical levels, and now we're pushing towards the downside. WDC underneath key technical levels here as well. As for SK Hynix, this one is rejecting off our key technical levels. We're actually making a brand new low on SK Hynix. We're now breaking underneath our key level support here as well, which is our 152. Once we broke underneath that, you can see we end up having continuation towards the downside. Other levels that we have marked out as well is just going to be that previous day low, which is that 140. Now what I like to see is a reaction that we have off our 140, potential pop and fade coming to market open for a push towards the downside, offer previous day lows for continuation lower. If we can see a flip, then we can see a push back up and towards that 144. So That's what we have for SK Hynix coming into market open. Some other key technical levels that we have marked out. MRVL on the daily time frame. This one's pulling back down into key technical levels 180. As you can see, lower highs are being built. We could see a potential like double bottom here, but very unlikely. With the overall market pushing lower, we are most likely just going to have a little bit of a deeper retracement. I would like to see some sort of buyer step in for potential mean reversion back towards the upside after this initial drop. But this is our exact key level. This is our 180 here on MRVL. As for a few other tickers, ServiceNow, some of the software names have moved nicely within the past couple of sessions. ServiceNow just kind of right at a key technical level of support. We would like to see that break back above that 112 for any sort of continuation. We had earnings recently as well. End up having a pop, fade towards the downside, but reclaim back above that 94. And you can see we're now continuing back towards the highs. Key technical levels on ServiceNow, as I mentioned, is just going to be that 112 along with that 96. As for a few other tickers, Palantir, this one, nice bounce right off our key level support. In the pre-market, we're actually dropping here on Palantir. So nice bounce yesterday, only to be followed up by now a sell-off here in the pre-market back towards the downside. But as for Palantir, if we're looking at this one on the daily time frame, we are back inside of the kind of this period of consolidation. Nice buyers that stepped in yesterday, but as I mentioned, pretty big rejection in the pre-market. So kind of invalidating the setup for continuation. And we're back to that original breakout level, which is at 127. All right. As for a couple other names that we have coming into market open, let's take a look at Robinhood. This one has earnings on Wednesday, but we are at a key technical level of support. We'll see if any buyers want to step in here, offer 92 for any sort of potential continuation back towards the upside. If we do break underneath that 92, we can see a potential flip, and we can see that push right back down and towards our 90 here and below. As for today, let's go over the game plan coming to market open. For today, as I mentioned, we're just going to keep an eye on that previous day lows. That's going to be key here on the Qs. If we get back underneath, we can see this flip for a push lower. If we do want to see some buyers that step in, we can see this flip back towards the upside. SPY, we're going to mark out that 740. SMH, we're showing a lot more weakness. We're going to keep an eye on that previous day lows coming into market open here. Couple of you guys talking about NBIS. This one is about to come back down. My key level here on NBIS moving forward is going to be our previous retest level here off this weekly time frame. It's a little bit further away, but this is kind of the area that we bounce from. You can see retest. Most likely, we're either going to bounce off two key technical levels. We had that original bounce off 160. Now we end up still staying a little bit heavy, so you can see a little bit of a deeper retracement, potential bounce once again off that 160. Or now we're going to see a little bit of a deeper retracement, and then we're going to start bottoming here off that 120 for a pushback towards the upside. So with that being said, with the Qs coming to market open here, the key levels that we have marked out, as I mentioned, is going to be that previous day lows. My main watches for today, we're going to keep an eye out for Tesla underneath that 308, pop and fade for continuation towards the downside still. AMD, we'll keep an eye on that previous day lows. NVIDIA, we'll keep an eye on that previous day lows coming to market open. Apple is one of the only bullish tickers, so Apple, just keep an eye on continuation above our previous day highs. As for everything else, right, Google, Microsoft, above our previous day highs coming into market open here is in play. As for the rest of the tickers, so we have Tesla, AMD, and NVIDIA for some downside. Tickers that are a little bit stronger, Apple, Google, and Microsoft coming into market open. As for the semiconductors, these ones are a little bit weaker. Semis have been weak as of late. Keep an eye on MU underneath previous day lows, SNDK underneath previous day lows, INTC underneath previous day lows for, of course, continuation towards the downside. So that's going to be it for me today. Same game plan as per usual. Don't come into the markets with a strong bias to one side. Be open to playing both sides here in the markets. We are leaning slightly bearish now with, of course, the Qs breaking underneath our key levels of support. And now you can see every pop is being shorted. So we're leaning more towards the downside with at least now the Qs breaking underneath that 680 here. So we're going to be looking for downside as long as you can maintain underneath key technical levels. And we just maintain the trend, and every pop is still being shorted. But yeah, that's going to be it for me today. I'm going to get ready for market open here now. If you guys did enjoy that, I appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch list, That, of course, is in the description below here as well. Yeah, with that being said, I'll see you guys all tomorrow. All right, take care, everyone. Peace.